The check landed on my desk with a red stamp across our company name. It said, "The customer deposit account had insufficient funds." That was impossible because 6 clients had paid us that week. Together, those deposits totaled more than $82,000. My business partner, Daniel, had personally confirmed every transfer. Yet the bank had just returned our first refund, and Daniel looked strangely calm. I met Daniel 9 years earlier at a small construction conference. He understood sales, while I understood operations and project delivery. We started Northline renovations with 2 laptops and 1 borrowed truck. Within 5 years, we employed 18 people across 3 project teams. Customers paid 30% before materials were ordered. Those deposits belonged to their projects, never to us personally. Daniel repeated that rule whenever a new manager joined. That made his next explanation feel rehearsed. He blamed the return check on a banking delay. Then he offered to call our relationship manager himself. I asked him to make the call on speaker. Daniel laughed and said I was turning nervous over nothing. His hand stayed on the check while he spoke. When I reached for it, he folded it into his jacket. That was when worry became suspicion. I called the bank after Daniel left for lunch. Our usual account showed enough money to cover the refund. The bank representative said the check referenced a different account. Its routing details belonged to a business called DCM Project Services. I had never heard that name inside our company. However, the initials matched Daniel Charles Mercer exactly. The representative could not discuss an account we did not own. She could only confirm where our check had been drawn. I searched our accounting platform for DCM that afternoon. Nothing appeared in vendors, customers, or approved subcontractors. Then I searched every invoice attachment from the previous 6 months. 3 recent deposit instructions contained a different account number. The company logo and signature looked completely normal. Only the banking line had changed near the bottom. Daniel had approved each altered document from his administrator login, but approval history alone did not explain where customers actually paid. I contacted our external accountant, Priya, before confronting him. She created a protected copy of every invoice and access record. We compared customer confirmations against our bank statements. 14 deposits had gone to DCM Project Services. The missing total reached $219,000. Some materials had been purchased using our operating credit line. That concealed the shortage while increasing our company debt. Daniel had stolen cash and left us paying interest. Priya found DCM's registration through the state business directory. Daniel owned 90% of the private company. The remaining 10% belonged to his nephew, Marcus. DCM's mailing address matched Marcus's apartment above a tire shop. Its website promised project consulting but listed no completed work. The company existed mainly as a destination for our deposits. Still, we needed proof connecting Daniel to each altered instruction. Priya already knew where to look. Our document system preserved every earlier version automatically. The records showed Daniel opening approved invoices after midnight. He replaced our deposit account, exported each file, then restored it. Customers received the altered versions through Daniel's private email rule. The next morning, our shared folders looked untouched. One returned refund check had exposed the entire process. We now had dates, account numbers, customer receipts, and version history. Daniel still believed the check had disappeared inside his jacket. The following morning, I invited him to our usual finance meeting. Priya attended remotely, and our attorney sat beside me. Daniel entered, smiling, and placed coffee near his quarterly forecast. I asked him to explain DCM Project Services. His smile vanished before I finished the company name. First, he called DCM an approved payment processor. Then our attorney displayed the ownership registration. Daniel stopped touching his coffee. He claimed customers had chosen the alternate account voluntarily. Priya opened the preserved invoice versions on the conference screen. Every change showed Daniel's login, timestamp, and downloaded copy. Next, she matched those files to customer payment receipts. Daniel asked everyone to leave so we could settle privately. Our attorney refused because the evidence involved customer funds. Then 2 board members joined through the waiting video call. Daniel finally understood the meeting was not a negotiation. The board suspended his access before he left the room. Our bank froze transfers connected to the disputed customer deposits. We notified every affected client before rumors could reach them. Their projects continued because our insurer approved temporary funding. The investigation lasted months, not the dramatic hour Daniel expected. Forensic accountants traced most transfers into property and luxury vehicles. A court later ordered those assets preserved during the civil case. Daniel's nephew cooperated after learning his name covered the account. We recovered enough money to repay every affected customer. Daniel surrendered his ownership under the settlement agreement. He also remained responsible for costs tied to the diverted funds. Our company survived, though trust required longer repairs than cash. We added 2-person approval for every banking instruction afterward. No administrator can now alter payment details without an alert. That return check became our cheapest and most important warning. Betrayal often hides behind ordinary paperwork and familiar signatures. The safeguard is not suspicion, it is independent verification. Which small inconsistency would make you inspect the entire trail? Share your answer below because someone else may need that warning. Subscribe to Karma Served Cold for the next story.